Joining as we start, but it's a few minutes past, so we'll just go ahead and get started. This webinar will be recorded as well, and we'll be sure to send out the recording afterwards as well. And with that, I'd like to introduce Didier Trin, who's our Government Affairs Director at Main Street Alliance, who will give us a little bit of overview of what you're going to hear today, including an introduction from one of our star members in North Carolina, Leonardo Williams, the owner of Zoelli's Restaurant.
Good afternoon, everyone. Thanks, Sarah. I'm Didier Trin, Government Affairs Director for Main Street Alliance. I'll be very brief so that we can get right into the content of today's webinar. Just want to thank our partners at AAPI Victory Fund and AAPI Victory Alliance, along with our colleagues at the Small Business Administration for partnering with us to share this important information ahead of the launch of the Restaurant Revitalization Fund. We have some breaking news that we'll be sharing in a few moments, but before we get started, I'd like to turn it over to Leonardo Williams, an MSA member who will be getting us started today. And so, Leonardo, over to you.
Didier, thank you so much. And good afternoon, everyone. I'm Leonardo Williams. I am the owner, co-owner with my wife, Zoelli, of Zoelli's Kitchen in Durham, North Carolina. We are really excited to be here today. And as a proud Main Street Alliance member, I too want to thank the AAPI Victory Fund and the AAPI Alliance for partnering with Main Street to make this happen today. So I want to give you a few housekeeping items here for us to just sort of reference during the presentation today. But first, I want to just sort of address while we're here a little bit about who my wife and I are. We're restaurant owners, so if you hear that in the background here, I'm in a restaurant. We are located in Durham, North Carolina, and we're the first Zimbabwean restaurant in the United States. And we are heavily involved in the community, and so just making sure that we can do advocacy work to support other small businesses across the country, as well as here locally. We're all about it. So while we're here today, I'm gonna look at my notes so I don't miss anything. Recently, Congress passed the American Rescue Plan Act last month. And this included the authorization of $28.6 billion for a new grants program at the SBA. And this is to support restaurants and bars. The Restaurant Recovery Act here is modeled after the Bipartisan Restaurants Act to help one of the hardest hit industries during the COVID-19 pandemic. It was through the advocacy of the Independent Restaurant Coalition, other small business groups like Main Street Alliance, and most importantly, restaurant owners like my wife and I. We're all across the country. And we're here today to bring this to a culmination and build on the momentum that's already there. It's so crucial. So as a restaurant owner myself, I know that there are folks just as eager as we are to learn of the details of this Restaurant Recovery Act here. And so tune in today, pay close attention. There's going to be lots of information, and we're looking forward to learning as much as possible. I just want to quickly introduce the presenters today from the Small Business Administration, the SBA. They've been hard at work, webinars after webinars after webinars, to get the word out to as many people as possible. So I want to introduce to you Anna Marie Lucas, who is the Senior Advisor in the Office of Field Operations at the SBA, and also who will be joining us a little later, Nicola Montagna, who is the Special Assistant in the Office of Capital Access at the SBA. They will walk us through what we need to know about getting access to this program. And so if you have any questions, we will have time allotted for question and answer. There is a Q&A function for submitting questions here in Zoom, and you'll be able to utilize that feature. And also we'll reserve time for any other comments following the presentation. We'll also share with you how you can be involved to contributing to help build out these programs more, and seek your feedback and be inclusive as possible. So looking forward to having everyone here learning as much as possible about this. Let's get to the goods. Anna, off to you.
Thank you, Leonardo and DDA and everyone at Main Street Alliance. I want to start by acknowledging all the hard work that you all have done to get us to this place, and that the last year, give or take, has been particularly hard on the restaurant industry, and appreciate all of you all continuing your work and advocacy to try and bring some relief to what we know has been a very hard hit industry. Our hope too is that the information that you learned today in the presentation is shared among your communities, your friends, your family, your staff. Our hope is to try to get this information out as far and wide as possible in advance of when we are launching the program. We want to make sure that we answer as many questions as we can. If we're not able to, we'll provide you with resources that can help you get an answer to your question. And we're going to cover a lot of material today. So if there's questions that you have as we're going through pieces of the material, feel free to put that in the Q&A chat box. And my colleague Nicola and I will attempt to answer them when we're finished wrapping the presentation for as much time as allows. So with that, let's get started. Sarah, if you can advance us to the next slide. Excellent. So as Leonardo mentioned, the Restaurant Revitalization Fund comes from the American Rescue Plan Act. This was a law that Congress passed on March 11th this year, which appropriated $28.6 billion from the American Rescue Plan to the Restaurant Revitalization Fund, and put the Small Business Administration in charge of authorizing those award funds to eligible businesses. That money, we think, is not enough. We recognize and acknowledge that. We will keep them and as far as we can stretch them, and they will go until they are spent down. We are giving eligible entities until March 11th of 2023, which is 2 years after the plan was actually passed into Congress, or from Congress, to spend the funds on eligible expenses, and we'll talk about what those are in just a minute. But I do want to give a shout out to our administrator. Her push was to try to make this as accessible as possible to folks, and to give enough of a on-ramp so that people can, businesses can plan on how they want to spend this money and use it for the long term and not just as a short-term fix. So Sarah, if you can, thank you. So now, who is eligible? So the very first bullet here, businesses that are not permanently closed, and businesses where the public or patrons assemble for the primary purpose of being served food or drink. So here we have some explicitly called out in the statute types of businesses, and they include the following: restaurants, food stands, food trucks, food carts, caterers, bars, saloons, lounges, taverns, snack and non-alcoholic beverage bars like coffee shops or ice cream shops, bakeries, brew pubs, tasting rooms, tap rooms, breweries and or microbreweries, wineries, distilleries, inns, and other places where the public may taste, sample, or purchase a product. The entities that have an asterisk next to them are presumed to have, the entities that have an asterisk next to them are not presumed to have 33% of on-site sales in 2019 that make up food and beverage. And so if that is true for you, you are eligible. The ones that do not have an asterisk are presumed to have more than 33% of on-site food and beverage sales. And we'll get to that, how you can show that later in the presentation, and so that we can provide the proper documentation if indeed you fall into a category with 33% on-site food and beverage sales in the year 2019. Next, if you are in any of the following entities, you are ineligible to apply. And again, this is in the statute. So if you are a state or local government operated business, if you are owning more than 20 locations as of March 13th, and that is regardless of whether or not they have the same names, different names or different industries, different states, et cetera. This is intended to be a small business application. If you have a pending application, or if you have received money from the Shuttered Venues Operator Grant, if you're a publicly traded company, you're not eligible. If you're permanently closed, if you're a nonprofit, you are not eligible. And the minimum award amount for this fund is $1,000. So if, when we'll go through the calculations in a minute, if your calculations end up being less than $1,000, you are not eligible for this fund. How much am I eligible for? So per location, you can get up to $5 million, but not to exceed $10 million total for the applicant and any of the affiliated businesses. And again, the minimum award per business is $1,000. This is slightly different if you have accepted money from other government programs and you've had to ask to provide a sba.gov or a DUNS or CAGE identifier. You will not be asked for those things in this application. If you're wondering what any of those acronyms are, don't worry. You are not having to worry about them. We are not asking for those. There will be other documentation that proves that you're a business, but unlike previous applications, we're not asking for the sba.gov, DUNS, or CAGE identifiers. Unexpired ITINs are acceptable, and there's links there for what an unexpired ITIN looks like. Basically means that you filed taxes in the last 3 years. Okay, types of organizations. This is from, again, from our statute. If you're a C Corp, an S Corp, partnership, LLC, sole proprietor, self-employed, independent contractor, tribal business, or an LLC taxed as an S Corp or sole proprietor, you are eligible to participate in this Restaurant Revitalization Fund. If you have questions around whether you're self-employed versus a sole proprietor, do let us know, or do refer to your tax returns, and that can distinguish whether or not which category you fall into. Franchises. So if you are a franchise and you meet all the other requirements around 20 locations or less, et cetera, you are eligible, but you must be listed in the SBA franchise directory. If you are not sure whether or not you're listed, you can look up your entity in the franchise directory on the SBA website. And you can skip to the next one. Great. So if you are a business that has filed for bankruptcy and you are operating under an approved plan of reorganization, either Chapter 11, Chapter 12, or 13, and you meet all the other program requirements, you are eligible for funding. If you are permanently closed and filed a Chapter 7 liquidation bankruptcy, or filed either Chapter 7, 11, and 12, or 12 and 13 bankruptcy, but not operating under approved plan of reorganization, you are not eligible for this grant. Permanently closed does not mean that you are temporarily closed because of COVID or other state or local restrictions, but are still in operation, or if you've reopened. So even if you've temporarily closed and reopened, or are still temporarily closed, you are not in any type of bankruptcy, you are still eligible. So the PPP program, some of you may have been eligible and received PPP funds from either this year and or last year. If you have, that is fine. We are going to ask in our calculations that you subtract that amount of PPP funding that you've received from the final amount of funding that you would be eligible for under this program. So when you're applying, we'll ask you for the amount of money that you may have gotten under PPP, and we will use that in our calculations to determine how much money you're eligible for. You must use the same EIN number for this application, the Restaurant Revitalization Fund, as you used in your PPP, particularly if you have multiple entities under different EINs. If one of those EINs has received PPP money, you must also use that same EIN to apply for this restaurant grant so we can keep track. If you've gotten a first draw from multiple locations under one and subsequently applied for a second PPP draw under different EINs, you must provide those EINs for entities that received the second PPP loan. And this, I think, would be true for everyone here listening, but in case it's not obvious, you must certify in your application that the current economics uncertainty makes the funding request for this Restaurant Revitalization Fund necessary to support your ongoing or anticipated operations. You will have to self-certify in the application that this statement is true. Okay, now let's quickly go over the eligible uses of funds. So in the first column here, business expenses, the administrator is trying to keep this as open and accessible as possible. And so you all as business owners or operators know what you need to keep your business going. We want the funds that you receive to be able to use for a broad variety of things. And they would include payroll costs, including sick leave, utility payments, maintenance expenses, business supplies, including PPE or cleaning materials, business food and beverage expenses, any covered supplier cost, or operating expenses to keep your business open, like insurance costs, marketing costs, other fees or licenses, any legal costs, and any of your POS equipment. There is a caveat here under construction expenses. If you want to expand your outdoor seating capabilities, the funds here under RRF are eligible to be used for that. But expansion costs, so for example, if you wanted to add another wing to your restaurant or do a build out on the inside of the restaurant that's not related to the outdoor seating, that is not eligible. Also here in the third column, important to note, this may be different from other loans that you've received. Any business debt that you may have, either on your mortgage or other types of business debt, including the principal and the interest, you can use this money to pay some of that down. You may not prepay. That's the only huge caveat here in terms of your business debt. So you can pay principal and interest, you can pay back rent, you can pay back utilities, to bring yourself whole, but you're not allowed to prepay any of those expenses from RRF money. When do you have to use the funds? So we are using for the calendar February 15th, 2020. And this is an expense that anywhere from starting on February 15th, 2020 to March 11th, 2023. February 15th, 2020 is when the government sort of recognized COVID as a problem. And that is when we are sort of marking as the beginning of operations being impacted by the effects of COVID. And so that's the date that Congress picked to sort of start the beginning, to mark the beginning of the issues. We're giving until March 11th, 2023. Again, 2 years after the law has been passed from Congress to spend down the money that you would get from the Restaurant Revitalization Fund. So any expenses that you incurred between those two dates are eligible to be spent with your money that you get. If you close after you receive the funds, which I hope doesn't happen for anyone here, but if you receive funds and the business permanently closes, your covered period of expenses will end when the business actually closes or on that expiration date of March 11th, 2023, whichever occurs sooner. And any funds that you receive that are not spent on eligible expenses by the time March 11th, 2023 comes along, you must return them to the US Treasury. So after you receive your award amount and you have spent it all down, you must provide a detailed expenditure report and certification for the required period. So we are asking for at least an annual report of data on how you've used the distributed funds every year until 2023. So this year, 2022 and 2023 will ask for a yearly accounting of how you spent the money. And then if you spend the money before the end of the term, we will ask you for a detailed expenditure report, even if it's before that time of March 11th, 2023. So annually, if the money lasts that long, and when you run out, we'll need a complete detailed expenditure report. And we don't have all the dates and deadlines for those yet, and we're working on that. So you will get additional guidance if you receive an award here on when you are expected to share that information with the SBA. Okay, this is the big question. So there's a couple different ways that you can calculate your fund amount that you would be eligible for. The first one is for folks who have been in operation prior to or on January 1st, 2019. And by in operation, we mean you have opened your doors and made your first sale to the public. We recognize that in operation, before you actually get to that point, you probably will have acquired some costs to open your doors, but we are counting what a business opening date means from the day that you made your first sale. So if that was before January 1st, 2019 or on January 1st, 2019, this calculation applies to you. This is the simplest, most straightforward one, as long as you are in business before or on January 1st, 2019. We are going to ask you for, actually, Sarah, could you go back to the first slide? Thank you. We are going to ask you for your gross receipts from 2019, when things were operating before the pandemic. You will subtract from that your gross receipts from 2020, recognizing that that is a year that everyone had to operate with pandemic restrictions. And then if you received any PPP loan amounts, you will subtract that from the delta there. And the amount that you are ending up with is the amount of your potential fund amount. That is your award that you will be eligible for. This is the most straightforward calculation. If you are in business before or on January 1st, 2019, this is the calculation you must use to determine how much money you would be eligible for. If we go to the second slide, we'll talk about calculation 2. This is for applicants who opened operations partially through 2019, which means you were not open for the entire year. You did not open you opened sometime after January 2nd, 2019. You do not have a full year's accounting of being in business while you were not in a pandemic. So we're going to ask for your average gross receipts per month from the year 2019, and we will multiply that times 12 to give us a full year, subtracting your gross receipts from 2020, operating the full year in the pandemic. And again, if you've received any PPP loan amount, we will take that off the bottom. And the answer there, whatever you get, that dollar amount is what you're eligible for in terms of your RRF fund. There's also a calculation 3, which we'll get to in just a second. So if you are an applicant who began operations partially in 2019, you can use this calculation number 2 or calculation number 3. You can do the rough math and see which one you think is best for your business. And you can choose to use this calculation number 2 or number 3, which we're about to talk about in a second. But do note that the third calculation may take longer to process because the paperwork that's required is going to take a little bit more time for our reviewers to look at. So we can go to the next slide, calculation 3. And I'm now joined by my colleague, Nicola. So welcome. All the tough questions I'm going to punt to her, but we're just rolling through it. So jump in, Nicola, if there's anything you want to add to anything I'm saying. So calculation, and welcome. Calculation number 3, this is for folks who began operations on or between January 1st, 2020 and March 10th, 2021. and applicants not yet opened but have incurred expenses as of March 11th, 2021. So let me say this one again. Applicants who began operations on or between January 1, 2020 and March 10th, 2021, and applicants who have not yet opened their doors but plan to and have incurred eligible expenses as of March 11th, 2021. These are folks who have only been operating or plan to operate under pandemic restrictions. Your total amount, award amount, you should add up all the eligible expenses that you have incurred between February 15th, 2020 and March 11th, 2021, minus 2020 and 2021 gross receipts. And if you received any PPP loan amount, subtract that off the total, and the answer you get there is going to be the amount of money that you're eligible for from this fund. Again, if you began operations partially in 2019, you can use this third calculation or the second calculation to see which one you think is best for your business. But again, keep in mind, because calculation 3 is not going to have full tax returns and is going to require a bit more paperwork that will require a bit more review from our team. This may take slightly longer in the processing time. So keep that in mind if you are deciding between whether or not to apply for calculation 2 or 3. Okay, what can I exclude from the 2020 gross receipts? So if you received any PPP money in 2020, we are going to take that off the top and you're going to include that in your application. So that is not going to get counted toward your gross receipts. If that's either the first draw or the second draw in 2020 and or 2021. So any PPP money that you got in 2020 or 2021 is not going to be included in your total 2020 gross receipts amount. Any SBA section 1112 payment, any EIDL loan money that you got, any EIDL advance, targeted EIDL advance, or any other money through CARES or other programs like that will also be not counted as part of your 2020 gross receipts. Any state and local business grants that you may have gotten outside of the federal grants, and any of the Randolph-Shepard Act financial relief and restoration payment appropriation. If you have not received any of these or don't know what any of them are, don't worry about it. But if this applies to you, this will not be included in your 2020 gross receipts. Okay, now the question is, how do you apply? The first thing that we would recommend, if at all possible, is to do it online at restaurants.sba.gov. This is a platform that will go live when the application is ready, and we will encourage folks that can use an internet access to apply through the internet. Recognizing that not everyone has access to reliable and fast internet, if you can make plans to be somewhere or get someone to help you, we strongly recommend and urge that, but we do have other options if that's not an option for you. Another way you could apply for this money is through your point of sale vendor. The SBA is looking to partner with more point of sale providers. We have a couple that maybe Nicola can provide exactly who they are. This is particularly for folks that are relying very much on their point of sale vendor for their books, and we are working with them directly so that they can verify that your gross receipts that you'll provide for us will come from them, because they will have access to all of that, and they are working closely with us to make sure that that is a clear and easy process for you. That's not going to necessarily give you a leg up, but it is just another option for folks that are trying to get their receipts together, and if they have a good relationship with their POS provider, that can be an option as well. And then lastly, we do have a hotline number, an telephone hotline at 844-279-8898. This is an option for you if the internet is not. You can apply over the phone. We will have folks who are trained to answer questions and receive your application. You may need to fill things out on paper and then snail mail them in. So I do want to caveat that this will have longer processing times. That is why we are trying to encourage everyone who can to apply online, but know that there is a phone option available if that is better for you. Okay, documents that you need in order to apply. So this is what we hope that you have on hand when you are ready to apply for this program. And we hope that we give you enough time to pull this together and consult with folks if you need some help figuring out what's right and what's wrong. The first thing is you want to make sure that your SBA form 3172 is completed, initialed, and signed. You can do that digitally online through our grant platform, and that should be sufficient. Tax information. Obviously, if you have 2020 tax returns, that is ideal. If you don't, that is okay. We have other options, but we are going to need form 4506T completed and signed by you, the applicant. And again, you can do this digitally on our platform. And back to our gross receipts documentation question. These are forms that can demonstrate your gross receipts. And if you don't have a full accounting of that, other eligible expenses that may not be included in your gross receipts, but that you have taken on as a business that you may want to count as part of your application. So IRS returns form 1120 or 1120S, IRS forms 1040 Schedule C, or IRS form 1040 Schedule F, partnerships, IRSs, other bank statements, and then like externally or internally prepared financial statements like income of profit and loss or a P&L statement, and then a point of sale report, including an IRS form 1099K. And again, this can be accessed through your point of sale vendor if you are using one. Okay, so for calculation 1 and 2 that we just went over, you are, everyone is going to need that SBA form 3172. Everyone is going to need a tax verification form 4506T. Everyone will need a 2019 gross receipt tax return. Everyone will need to provide 3 months of bank statements. And then for your 2020 gross receipts, you will need at least one federal tax return, point of sale report, or we can accept, but again, this may take a bit longer because we will need our reviewers to take a closer look at any externally or internally prepared financial documents, such as a P&L statement that's dated and signed by you to certify your accuracy. So we are trying to make this as accessible as possible for folks that are using calculations 1 and 2, but do know that if you have all of these forms before you apply, your application will go much more smoothly and quickly. For calculation 3, so these are the folks that have not been in operation for the full or since before the pandemic has been officially recognized. Again, you'll need your application form 3172 from the SBA. You'll need a tax verification form 4506T. Again, you'll need 3 months of bank statements. And again, that's the most recent 3 months of your bank statements. Gross receipts for 2020 and 2021, as much as you can provide for at least one of these per year. You'll see on here, federal tax returns for 2020 is preferred, but understand that not everybody will have that. 2020 point of sales reports and 2021 point of sales reports. Eligible expense documentation, we will need one of these. And again, you can support, or you can add supporting documentation for each of these. A CPA comfort letter, which is something that you can provide for your P&L balance sheet. And if you work with a CPA, or if you have access to a CPA that can provide what they call a comfort letter, that will really help the SBA review this in lieu of other documentation. This just allows the SBA to say that a certified CPA has looked at your information and deemed it accurate, and that they feel like they can authorize that as part of your application. And we will also accept, but again, this may take a little bit of time in terms of the review on our end, any externally or internally prepared financial statements, such as a P&L outside of a comfort letter. and any other expense documentation like payroll or other invoices. So do your best to have as many of these preferred documents as you can in advance of applying, but understanding that people are in different positions, particularly folks who are using the third calculation. We're trying to make it as accessible as we can, but also make sure that we can verify some of the statements that you'll provide us so that we can move your application through the process. Okay. In addition to the documents we just talked about, if you're a brew pub, a tasting room, a tap room, a brewery, a winery, distillery, or bakery, we want to make sure that you can show that at least 33% of your gross receipts for 2019 happened on site. And so you are, if you can provide that information to us, that will be helpful. That makes you eligible for this grant. And we want to make sure that we have as many documents evidencing that as you can provide, including things like tax and trade bureau forms, other state and local forms, or internally created reports from your inventory, your sales reporting, or your accounting software. If you're a business that opened in 2020, the original business model should have contemplated at least 33% of your gross receipts on site. So if you can provide that to us, for those more newly open businesses, that is going to be very helpful to show that you're eligible for this grant. If you are an inn, you also want to show that you have on-site sales of food and beverage of at least 33% of your gross receipts. And again, if you opened in 2020, you should be able to show us that your original business model was planning on having at least 33% of your sales and gross receipts on-site of food and beverage. Okay. When you are applying, or as you are getting ready to apply, if you have questions that Nicola and I cannot answer here, we have provided a couple of options here for you. There's the hotline again. Again, this is a staffed with trained people who are able to help you in multiple languages and can answer questions about the application, about your eligibility, making sure that you have everything before the application actually goes live. And if when the application goes live and you're not able to access something, this hotline is going to be your first go-to resource if you can't find the answer online. You also have local district offices from the Small Business Administration all over the country and in the territories. You can find out who that person is if you're not already linked up to them at sba.gov/local-assistance. That is a good point of contact for you if you, beyond just the Restaurant Revitalization Fund. So obviously we're here to help with that, but the SBA district office is doing SBA programs all year round for a variety of things. And that may be a really good resource for you. Okay, just a couple of things to overview here. As you are preparing to apply, please make sure that you have complete documentation. If you submit an application that is not complete and your documentation is not complete, it will be rejected, and you can restart your application when the complete documentation is provided. Cannot go back and edit. SBA is not able to go in and make any changes on our side. So please make sure you have everything that you can with your documentation before you get started, because if it's not complete, you will just get delayed. You will have to restart the process, and it could jeopardize whether or not you actually get your funding. Leverage your resources. It's not required, but if you have access to a CPA or another accounting professional to go over your documentation, especially if you're using calculation number 3 and you don't have full tax returns of the years that we're asking for, they will help you make sure that you have a complete and well-documented application. Those are good folks to lean on. We recognize that that may cost resources and time, so we're hoping to get this out as in advance as possible. But if you are able to access that help, please do that. Again, we at SBA cannot make changes on behalf of the applicants. And so when you're making your application, so please make sure you have everything in order before you get started. And if you are still planning as a business to apply for PPP, we suggest that you get that application done in advance of applying for this application, so we can keep track of who is asking for which funds. It will not mean that you don't get RRF money. It just means that we need to know on our side who's applying for either or both. Nicola has something to add.
Yeah, just to clarify on that, you will not be able to, you cannot get a PPP loan after you apply for RRF. So it really is, you have to withdraw your application for PPP if you've not gotten funding yet, because as Anna walked through earlier, the calculations are dependent on your PPP loan amounts. And so you can't get any funding through PPP after you apply for RRF. So your application for PPP won't go through if it is pending or outstanding or hasn't been approved yet. So if you're still planning to get PPP, you should definitely quickly apply and move through that process. And then if you haven't been approved by the time the application opens and when you intend to apply for RRF, you should withdraw that application.
Thank you. That's good clarification, Nicola. Okay, a couple of notes around a pilot period. So SBA is working with businesses that have received PPP money and have randomly selected a number of these businesses to go through the pilot period that is now happening for the Restaurant Revitalization Fund. This is intended for us to learn if there's any issues or glitches, and want to make sure that the application itself is clear to participants so that we can make changes before it goes live to everyone. They are in the process of doing that now, but they will not get any money if they're eligible until the public is all allowed to apply. So this is just a sort of a test on our end to make sure that the technology is working, that everything is clear, and that we can, if there are adjustments that need to be made, we can do that in advance of the application opening. And then I want to talk just quickly about a priority period. And so the first 21 days of the application being live and ready to accept applicants, we at SBA are accepting applicants from a priority period that we define here, or is defined in statute actually, but is identified as women-owned, veteran-owned, and socially and economically disadvantaged applicants who own the business. That means the first 21 days of this program going live, those applications from businesses that fall into that category, women, veteran, or socially and economically disadvantaged, will be given priority for funding. And we'll talk in a minute about what that means. It does not mean, though, that if you do not, let me rephrase this. If you do not fall into one of those categories, we still encourage you to apply on day one. But those applicants that fall into that period will be given priority for funding for the first 21 days. On day 22, all of the applications will be processed and we will fund it until the program funds are exhausted. Okay, so what is a priority group for those first 21 days in order to get the funding? So small business that is at least 51% owned and management and daily business operations of the applicant are controlled by one or more individuals who fall under the category of women, veteran, socially and economically disadvantaged. If you have 51% ownership of people who make up those categories, then you can be considered as part of a priority group. We will ask you in the application to self-certify that you meet these requirements. So you are going to have to, if you think that you are a part of a priority group, you will self-certify on the application that you meet this eligibility and that you are part of the priority group. So for example, if an applicant has 5 owners who each own 20% of the business, 2 owners are veterans, 1 owner is socially and economically disadvantaged, SBA will consider that applicant to meet the requirement of at least 51% ownership by a priority group. Now, how do you define some of this priority group? I'm going to read to you, this is what's included in our statute. Socially disadvantaged individuals are those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. Individuals who are members of the following groups are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaska Native and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. Economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. And that is directly from the statute. Okay, if you are a business entity and you are reorganizing for purposes of qualification under the priority period that we just explained, it will result in automatic disqualification of the award. So we will look to self-certified businesses that fall under that priority period prior to March 11th, 2021. Okay, quickly. I know this has been a question that's come up a lot. So we have, as I mentioned, SBA has a certain amount of funds that Congress has allocated for this particular relief fund. They've broken it down into smaller categories to make sure that we are trying to be equitable in the distribution of the funds. So applicants with 2019 gross receipts of less than $500,000, there is a set aside of $5 billion from the big fund for applicants that fit in that category. Additionally, another $4 billion is set aside for applicants with 2019 gross receipts from $501,000 to $1.5 million. And then another $500 million is set aside for applicants with 2019 gross receipts of less than $50,000. So the idea there is that we're trying to have some tiers and categories of businesses that are applicable or that are eligible. And so we're trying to distribute the money in terms of size from your 2019 gross receipts. The administrator has some discretion to change this, but this is sort of what our guiding principles are in terms of who will get what amount of award. Okay, so I'm going to stop there. I know that there are some questions coming in the chat. Before I turn it over to Nicola for any other help, if you have questions, I know we probably have until the top of the hour here that we did not answer and you want to add them to the chat, please feel free to do that. We'll do our best to get them answered before the top of the hour. But I want to turn it over to Nicola first to make an announcement on timing, which I have not actually even discussed, but this is late breaking news that I thought you want to hear from my colleague.
Awesome. Yeah, someone asked about this, and so we'll just clarify it for everyone. We announced today that you can begin if you're applying directly through the SBA portal. So you're not you don't use Square or Toast as your point of sale vendor, and you're going to apply directly through SBA. We'll begin taking registrations for that portal on Friday, April 30th at 9 a.m. Eastern, and registration just means you'll be able to go to restaurants.sba.gov and create your account, get your two-factor authentication settled, and make sure you're in the portal so you're ready when the application launches on Monday, May 3rd at 12 p.m. Eastern time. So you won't be able to start your application until Monday, May 3rd at noon. But you will be able to make sure you're all set up and ready to go starting Friday at 9 a.m. And that was based on feedback that we received from you all in your industry that, you know, Mondays and earlier in the week is the best time for you all in terms of when you get busy and the cycles there. So that is the reasoning behind the Monday date. And let's see, yep, 9 a.m. Eastern on Friday, April 30th is when you can start registering. and 12 p.m. Eastern on Monday, May 3rd is when you can start your application. If you use Square as a vendor, is it still possible to choose to apply directly with the SBA? Yes, definitely. You can do what's best for you. I will say that I would suggest checking out Square's application just because the partnership is meant to help make it easier on the applicant and make it a little bit more of a streamlined process, because Square will already have all of your information, your business information, your gross receipts, data, etc. So that's the reasoning behind the partnership. But of course, if you want to come directly to the SBA portal, you can do that as well.
Great. So Nicola, we have a couple of questions that I might just read out loud if you want to answer them, because I
Yeah,
give
sure.
you the tough ones. All right. So we have one, is accepting restaurant revitalization counted as taxable income?
No, it is not at the federal level, based on the American Rescue Plan statute.
Great. Do you expect entities who receive funding to receive 100% of the funds that they're eligible for?
I think we outlined early in the presentation the 2 caps. So it's capped at 5 million per location and 10 million for, like a restaurant group or multiple locations. So if you are below those caps, then, and you filled out your application correctly according to your gross receipts and PPP loans and all of your documentation, then you should receive what you are eligible for.
Great. Do you know if installing an HVAC disinfection system to protect employees and patrons, is that eligible expense for this fund?
Yep, that would be an eligible maintenance expense related to, the pandemic.
Great. If a business needs to change their offerings, thinking about a lunch spot versus changing from a lunch spot changing to a dinner, in order to pivot and adapt to just a drastically different landscape, is it possible to use the funds on interior renovations?
Interior renovations or expansion or other construction costs that are not related to outdoor seating are not eligible at this time.
Great. In terms of qualified entities, are cooperatives included?
They are not included.
Great. A question about bank statements. Should you use full months or screenshots of a partial month?
You should use the 3 most recent months of your bank statement. And I would just say that in general, defaulting towards, more PDF style documents is going to be better than just screenshots of documentation.
Great. Do you have to have filed 2019 tax returns, or can you use vendor data or internal financials like you can for 2020? This may depend on when you opened, but
2019 tax returns are required if 2019 gross receipts are included in your calculation.
Great. Times for applications are all in Eastern time, is that right?
Yep.
Great. If we have another question here, if we have 5 restaurants that all have their own EIN and receive PPP, but file taxes as one parent entity under one EIN, do we submit one application for the Restaurant Revitalization Fund under the parent company?
I think that depends. So if you can file, we would encourage you to file if you want to through the individual EINs, if that's where the PPPs live. However, I do know the differences between the first and second draw. You might also have a PPP loan under the parent entity EIN. And so there will be a spot in the application where you can list supplemental EINs where you received PPP loans that relate to the eligible entity. So we would, if you received a PPP loan at that parent entity, you should apply at that parent entity level. But if you did not, then you can apply at the individual 5 restaurant level. And you just have to make sure to list the other restaurants as affiliates and include any other relevant information there, make sure that doesn't exceed the 10 million cap, etc.
Okay, and I do want to clarify there's a question around this, but beginning Monday, when the application goes live, anyone can apply. In fact, we encourage everyone, even if you're not under a priority group, to apply. Part of that is so that we have a sense of what the demand looks like, and we have a sense of if Congress needs to add more money to this fund, which we think that they do and hope that they will, that we can show a demand and we can show a need for this money. So even if you are not part of the priority group, please consider applying on the day of the application opening next Monday. And you may not get an answer in the first 21 days, but we would love for your application to come in and be able to consider it. So I think we have one more question before we wrap, because I think there's another person who wants to close us out here. But Nicola, this one's for you. I moved my restaurant to a new and larger location in February of 2020. My rent has gone up, but due to the closures, have not seen the expected increase in revenue. Is there anything I should know before I apply for this program?
If I'm understanding the question correctly, I think what you should know is that if you didn't experience a loss in revenue from 2019 to 2020, you will most likely not be eligible for funds for this program. It's meant to replace receipt losses from 2019 to 2020 generally, or in 2020 generally. So I think that's what the question is getting at, but I'm not positive.
Okay. Before we turn it over to the closing out, I just want to thank everybody for being a part of this. If we did not get to your question or you think of something later on, please look at our website. We have a frequently asked questions list on there. And if you don't see your question answered there, please call the hotline and let us know what your question is. We are taking information from applicants and interested parties and adding them to our frequently asked questions so we can be as robust as possible in advance of the application going live next Monday. We hope that you all will apply, share this information with your community members, and let us know if you have any other questions. I'm going to turn it back over to DDA, who I think will help close us out.
Thanks, Anna. And I'm just going to actually pivot, since we're already over time, right to another restaurant owner member of ours, Michelle Tressler. Michelle.
Hi, thank you, DDA. And thank you to everyone from SBA for that extremely detailed presentation. I hope everybody feels like they have what they need to get ready to get those applications in on Monday. As mentioned, my name is Michelle Tressler. I'm the co-owner of Hinterland Brewery and Restaurant in Green Bay, Wisconsin, as well as the Whistling Swan Inn and Restaurant in Fish Creek. I too am a proud member of the Main Street Alliance. Main Street Alliance, along with 100 other small business organizations at both the federal and state levels, have recently urged congressional leaders to provide unrestricted grant access to all small businesses to help them get through the other side of the pandemic. We urge all of you to sign on and get involved in helping with these efforts. So again, on behalf of Main Street Alliance and our friends at the AAPI Victory Fund and the AAPI Victory Alliance, we want to thank everyone for joining us. We'll be sure to send all that information out from today's webinar to everyone who's registered. Have a great day.